Welcome to Momentum Monday. Today is December 26th, 2021. Merry Christmas, happy holidays, Howard. How was the
Ho,
Chinese
ho,
food?
ho, 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 ho. Let's hear it one time.
Ho, ho, ho. Sounds
That's
like,
that's not American. I didn't get you a gift. I apologize.
that's fine.
Why
Me,
don't we
me
say we
spending
sent each
20
other,
minutes,
I
me
say you
spending,
an Amazon gift card, you send me, it's all even.
I
Even
know,
Steven.
but me spending 20 minutes with you on a Momentum
What a
Mondays,
gift. It's
it's a
a
gift.
gift that just
It is a
it's
gift, so thank you.
how's life?
Life is good.
Did you do anything for the holidays? Chinese food?
No,
Did you get any good gifts? Did your gal get you any? Did you get a good gift?
I got some good gifts, yes.
I just took
Not
my
really.
kids out. Ellen and I just went out with the kids for dinner. I had Chinese food last night. Went to the Suns game. I love Christmas when the malls aren't involved because you don't have to listen to bad, depressing Christmas music and see people running around to buy gifts that aren't going to make anybody happy. Except kids. Kids. Christmas is good for kids, but as Trump says, there's no Santa Claus. The one thing I think Trump got right was that there's no Santa Claus. I mean, even he got that one right.
Yeah.
All right.
All right, let's go back to markets. So
What's
basically,
the, what's the idea of the show? Do we talk about the markets?
yeah, a little bit, just 2 minutes. So the main indices are still in a range-bound mode. You can see here Russell 2000, which is a small cap index, 2000 stocks, tested the lows from its long-term 10-month range, bounced again. I mean, it's still in a no man's land, below its 50, below its 200-day moving average. But at least buyers showed up. Large caps are looking a little bit better. S&P, Nasdaq 100 bounced again. They're just in a big range for the past few months. What matters is that the two big worries right now about the market, the Fed kind of tapering and the new Omicron variant, they seems to be, their impact seems to be lessening, getting smaller and smaller on the market. First of all, the Fed has been saying that they're worried about inflation. They want to taper. They want to eventually raise interest rates. But if you look under the surface, they continue to buy tens of billions of dollars every month of different bonds under just different programs. So what they're doing and what they're saying are two different things. And maybe this is why we saw this bounce in
There's all I
in
need
many
to look at
software.
their balance sheet, and their balance sheet's a fucking, if their balance sheet was like a human's balance sheet, we'd be bankrupt 7,000 times. But they have the power to print money and fucking cook the books until it becomes a political issue. What I think we have to worry about is watching the tape, and we will have plenty of warning when this becomes political. The market it won't be pretty, and that first 15, 20% down, you'll feel like an asshole for selling, but it'll be a real bear market, and you'll be happy you took your first 20% loss. Like what we saw in the tech pullback is baby cakes, big deal after the runs they had. These aren't even drawdowns, right? You don't have 400% up moves without a 30%, 40% drawdown. So, it's been a bear market for 2020 leaders other than Tesla. I think the real story of 2021 is semiconductors and Tesla.
Well, Tesla has been a big story basically for the past decade, since 2013. But yes.
I understand, but like it had a great 2020 and it had a great 20. Like most stocks that did well in 2020, the Zooms, the DocuSigns, they did not, have a great 2021. Apple didn't have a great 2020, had a great 2021. Google didn't have a great 2020, had a great 2021. Amazon had a great 2020, didn't have a great 2021. Tesla just, like even where the market bounced, Tesla had the most pin action of where the market bounced. It just like ricochets anytime. It is the strongest. Apple and Tesla seem to have had, and Google seem to be, and Microsoft. Fuck. So, the world of FANG is long over. This is a Microsoft, Tesla, Apple, and
Nvidia,
Google,
yeah.
and Nvidia, yeah, and crypto, right? Like there's just a whole new world. And if you're not connected somehow to distribution via decentralization, open source, you know, and you kind of transport, you know, the future of kind of transportation, you've struggled. Facebook is a great product and a great company, but you know, it's going to struggle here as Apple puts the vice on ads, and but they're not going to. It's not going to be real trouble for Facebook. It just may be growth headwinds at some level as
Did you
Apple.
see that this weekend the most downloaded app was Oculus by Facebook?
Oh,
Seems like a lot of people have received Oculus for Christmas.
wow. Well, let's see how they stay engaged with it. So that's interesting. So that's interesting. So again, I think the market bounced. I think there's reasons for there to be a bounce. We'll see as we get into the 1st of January when people start thinking about front running what everybody else is doing, whether it's around crypto or around the leaders of 2021, if we have the same phenomenon in effect. You know, I think people are waiting for the calendar to turn to make some tax selling decisions at this point, at least individuals, especially around crypto and certain stocks. So it'll be interesting the first few weeks. I think the laggards that have been dumped, and this is what happens, you know, I'm looking through a bunch of the laggards to see if you may get like a, you know, kind of the dogs of the Dow type thing, but, you know, at scale rallying. But, you know, I just don't spend enough time trading to see that. What do you see?
Yeah, definitely. So if I can just continue my thoughts from the beginning of the show. So I said that the two major worries, the Fed tapering and then the Omicron. There, there've been a bunch of graphs on Twitter just showing how the record spike in new cases hasn't led to any increase in new deaths, you know, meaning that, you know, the new virus symptoms are a lot milder than what the market was probably expecting. And this is why we saw that big bounce in a lot of the reopening stocks last week, even airlines and especially hotels, definitely one of the leaders last week.
And I think Live Nation, right? Like I was at a Suns game.
Yeah, anything related,
What a
anything
business.
reopening, even
You know,
CCL.
I just, you know, I was using Ticketmaster this weekend for the Suns, and my God, they gouge you, and they just have like a, I don't know. I think you pulled up Penn there, Ivan, and I think we're seeing a certain trend around these like brokerage. You know, if we could flip through all the brokerage stocks, less Schwab, you know, but if you go through Penn and DraftKings, if they don't, there's no margin in this thing. This is like, there's a lot of volume, but like, sorry, I was going, you're ahead of me there. Yeah, if I look at DraftKings and Penn, there's no lift here, right? They're still seeing more competition come out. More markets will open up. And I'm telling you, man, like it's interesting. I'm watching football today, Ivan, and I'm like seeing them say 99% chance. Like they're actually, it's pretty cool. Like I'm not a gambler, but there are times when they flash. They're definitely integrating into TV. I'm watching an NFL game and they're like, okay, 99% chance the game will end up this way. So if there's bets that people can start laying 1% bets down, like I get where that's all going. And so the stakes are very high around, you know, live sports and gambling. But if I look at DraftKings and Penn, Penn not so much an early movement, but if I look at DraftKings and FanDuel, I mean, they are under serious margin compression because everybody's going to come for that business, right? And then it's about how much can you pay, and they're pretty much all going to be similar products. So the hotels seem to have an advantage here because they have something they can give away. So where it comes to MGM and Caesars, they seem to have held up the best. And then Marriott can use their rooms too and maybe buy an app. So there's going to be a ton of consolidation. That space is interesting, but really complicated because of the government. And then, sorry, you were going through the brokerages. So let's go through those. iBanker, Schwab, they look good. The charts of the old brokerages look great.
Yes, they are. I mean, near all-time highs, definitely. So
Wow,
Schwab,
Interactive Brokers breaking out. So they added crypto. Let's see, go to a monthly there. Damn, that's a nice move off the bottom. Wow.
so this is monthly. And then
I mean, compare that to like Robinhood or Futu or Tiger.
Yeah, Robinhood hasn't done that well, and then the other two
No,
are
they're
Chinese.
saying,
So
and here's why. Like these guys have huge institutional customers and way more assets under management. So Interactive Brokers, that's super interesting. Yeah, these things evolve. Anything that's like with the new investor, the new retail investor, is just getting hammered, including Coinbase. But anything around, but Coinbase at least has an institutional business. And I think they'll hold in there much better. But if you look at Interactive Brokers and Schwab, what this is saying is the markets are pretty healthy, Ivan.
I mean, no one has argued against that, obviously.
No, but I'd like to argue against it, but it's hard. Like, I mean, people have money and they're trading and they're just, that Interactive Broker is a great looking chart. Are you happy with the product?
Yeah, I'm happy.
Have you traded crypto on it yet?
On it, no. I tried, I had some issues, so I don't think it's a perfect platform for crypto. I think still Coinbase and FTX and Gemini, they're better platforms for that.
Okay. Oh, Al just made it into Momentum Monday. Why don't you put on some clothes, hon? Ivan, cover your eyes. Have you ever seen a woman in a house coat?
Sure, Howard. Yeah.
No, I'm not counting your mom.
Okay.
All right, so that is probably one of the better. Where's Morgan Stanley? Interactive Brokers. Wow.
Yeah, Morgan Stanley, Goldman Sachs, it's just going sideways for the past few months.
Yeah. Interactive Brokers and Schwab look good. What else looks good out there, Ivan? Software didn't bounce that well. It bounced a little bit.
It bounced, but most of them are still below declining 20-day, 50 days. So this is something like for a short-term scalp than anything longer term. So I noticed late last week that quite a few of the beaten down ex-momentum new IPOs started to perk up again. So maybe end of the year and beginning of the next year, we might see a continuation in those. Obviously, I would treat them as strictly as short-term trading vehicles like Dutch Bros, like On. Have you ever had those shoes On? They're amazing. Like I've used them for
my daughter got
years.
me into it. I tried them on. I don't love them, but I get why people like them. It's Federer and oh, now Rachel's made an appearance. Okay, hang on. We're trying to get my dog.
Yeah, as I mentioned, quite a few of this year IPOs are starting to set up for a not this one, for a potential bounce. So typically, as you know, end of the year, the beginning of a new year, a lot of the beaten down stocks, especially high growth names, they tend to spike, and they can spike big time, like we saw last week in this one, Society Pass, which had a huge run, from 3 to whatever, 20 something.
Yeah, I think there'll be some squeeze. I think people are overconfident in their shorts. They hate a company, it's starting to act their way. Even a lot of retail people will get enamored with shorting. I remember the first time I had a couple shorts that were working in my hedge fund days, and then they can 2 days, like Capital One hardly did, a couple days can wipe out months of short profits. I think people forget that stuff.
Yeah, the short squeezes can be vicious, even during bear markets. So
yeah, I had one of the founders on my show, Capital One, an incredible company, on my podcast. All right, so what else? Semiconductors look good.
Sem is definitely the leaders. They didn't even break their 50-day moving average during that pullback when the Qs and the SPY were below it. They didn't, so that's a sign of relative strength. So a lot of names in the sector are looking good. You know, AMD, Nvidia, and then the smaller ones like even the Taiwanese TSM kind of building a big base here. What TICM, like there are like 20, 30 names in the space. They're kind of just building new bases and looking constructively. So, but like next week, I would be just focusing on those beaten down X momentum leaders.
I think there's, yeah, if I'm looking at anything, it might be fintech, which has just been in that PayPal, Square, Marqeta, Upstart.
Yeah, they're kind of setting up for a bounce, for short-term bounce. I cannot speak longer term. PayPal, obviously, it's had a really bad year. One of the few S&P 500 stocks that is down for the year. So,
well, it looked great until a few months ago, much like Interactive Brokers didn't look great until a few months ago. So again, markets can change. This is a very high rotation market. And the market is heavily favoring defensive stocks right now. We know how fast that can change.
Yeah, definitely rotational markets. So we say bull markets correct through market rotations. This has definitely been the case the past few months when we would see staples up at all-time highs and then some software stocks, you know, down 40 in less than a month. So,
and let's just go a couple questions. What's the biggest surprise that caught you off by surprise this year? Like some that really caught you by surprise?
I mean, the biggest surprise is the S&P itself, where it was up like 25-30% this year. Definitely did not expect that. If you remember our last show of last year, I said that I expect inflation to be a major theme this year, and it was, but I did not position myself like I didn't own any of the.
But if you had thought that the inflation, would you have predicted the S&P would do that well if the inflation was? Would you have thought?
I wouldn't. I mean, definitely the indices had a pretty strong year. So for active managers like me, it has been a struggle to even catch up with them. So the last year.
Most of the active managers I know that did well gave a lot back in the last few months, and that were ahead of the S&P. So the S&P just would kick my ass this year, but generally I'm QQQ, which did fine. And
then if you look at the first quarter, none of them, the Qs didn't look that great. The first quarter, they were like no returns. Like, where is the first quarter? Like February, here's January, up until basically April, the Qs were 0 for the year. So they started to perk up much later, basically second half of the year.
Yeah, that's interesting. I just see time just I'm trying to. And what was your best idea of the year that worked for you?
I don't really have a single best idea. I mean, I traded Tesla for a 50% return. Like I caught it from 700 to 1200. That's one of the good ideas.
Pretty damn good, yeah.
That I can remember. Most of my trades have been shorter term. So I've had many like singles and doubles, and especially when you leverage them with options, you see like 150% returns in those. So I've been just focusing on compounding, and I still couldn't outperform the S&P 500. So it happens.
Yeah. I mean, I think people think it's just 1 year. It's been a great run. Well, if it wasn't, I mean, I still have my best year ever, but it was because of crypto, which I'm not even actively doing. It was just luckily I have an allocation there. So sometimes I think.
Big year for crypto, yes.
But it's also a reminder to me of why indexing is becoming more important to me, is because basically I'm an indexer of crypto by giving it to other people. It's an allocation that I made that more than made up. And it's a reminder that, sometimes a 3 or 4% allocation can change your year if you get it right. So
but it seems like Bitcoin even underperformed the S&P if you look at it.
But I'm saying I got lucky because of Solana and
Helium. It was these smaller ones, the Ethereum, the Mana.
That's what I'm saying. I was indexed. I wasn't just Bitcoin.
Look at this one, Solana.
Yeah.
Wow, 100 times.
But there's so many of these.
So that's probably the biggest surprise for me, Solana. 200%. Wow.
Did you ever get to trade it? You don't follow it at all.
Never bought any Solana, but I follow.
I remember mentioning it in March for a couple of weeks on the show.
I started following those guys from Multi-Coin Capital, and so I'm reading their stuff. So hopefully I can get in some of the smaller plays that they have.
Yeah,
But no,
and
only Ethereum and Bitcoin for me. I guess I need to dive in further.
well, I don't know if you need to. It's just a reminder that there's, I've shared index ways to play crypto. I think it's very hard to.
Well, I
You have to
played like
understand the
the
tech.
stock.
What's that?
Well, I played the stock derivatives like MARA. Even on Friday, I traded this one, for
Yeah, but
10%.
that's not trading crypto. That's trading a derivative.
Yeah. I mean,
Yeah.
that was my approach. See.
Yeah.
So,
Yeah. No. 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 Listen. There's a million ways to skin a cat. What do you think the biggest surprise will be of next? Since this is probably our last show. This is our last show of the year. So, what do you think? If you were to kind of guess what's going to happen next year, what do you think?
for me,
When we
the
sit
biggest
back at the end
surprise,
of the year.
the
Yeah.
biggest surprise would be if we have another 30% plus year for the S&P or the Nasdaq 100,
Yeah.
like a third super strong year in a row.
Yeah.
That would be the biggest surprise.
Wouldn't it
Obviously,
be the fourth? I think we've had three in a row.
like 2019, yeah, 2019 was super strong as well.
Yeah.
And then we had, so that would be the biggest surprise. Like everyone is talking about super high valuations, but what if crypto brings just another super big, longer term wave that will last, another 5 years? This is
Yeah.
my biggest worry. I'm not worried about big correction because I know how to protect capital. Like I'm worried if the market, goes up super fast higher again, another 20-30%, and I'm not able to catch up. That's my biggest worry.
Why is that a worry?
Underperforming because I manage other people's money, so I'm underperforming.
Correct.
They're comparing me to the
Correct.
S&P 500.
Well, I'm just
So,
saying, the only reason you're worried is because what other people think of you. I think
yeah.
that's the danger. That's why, that's why people should learn to do this themselves, which is the number one thing. Even though you're great at this, your main worry is why people should do this themselves is because if you give it to other people, even somebody who cares about your money deeply, their biggest worry is FOMO, which makes not you, but most people, I'm guilty of it, do weird things. And this is why indexing works, why asset allocation works, right? If you want to get rich from the stock market, it helps to be rich to start. You've treated it like a business of your own money, and from that has come other people. But it is interesting to hear you say that your biggest worry is the market going up, which should be your biggest. That's what you should be excited about because it makes your job
I am
easier.
excited. I definitely, it's easier to make money in a rising market, but at the same time, I'm also worried, if we have
Well, that's
another
just, you
year.
got to learn to manage other people. The market goes
Yeah.
up 30%. It is hard to beat the market. That's the whole problem. But it is also something people should be happy about because the market was up 30% and a blind squirrel can do this. You get paid when the market's flat and you make 10 or 20% or 30%. So I think, I don't think but everybody worries about what you're worried about. I'm trying to think what I think the biggest surprise would be. I won't be surprised because of why you said it. Like the web is growing so fast and it's so global and there is so much money. The biggest surprise to me would be a prolonged bear market. But the reason we would get the beginnings of a bear market is if inflation becomes politicized. I forget what happens during election years like 2022. What's generally?
I think they have some midterm election and
No, but is it generally a good year during midterms?
I have no idea.
Yeah, I don't study all that stuff.
All I know is that it seems like the Built or Rebuilt America Act wasn't voted on, and it seems like it's not going to pass. So that might have.
It's not going to pass because the fucking lunatics on the left are as bad as the lunatics on the right, and centrism is not dead. And who cares who they're going to blame? But like, whatever brings us back to some kind of rule of government where they can actually come to gentleman or gentleperson decisions, even if they're the wrong decisions, but come to them consistently and correct themselves when they're completely wrong. Right now, it's not working. And maybe that's helped the market. So maybe a good government will be shit for the market. What do I know? But going into the end of the year, things look pretty good. Valuations are high, no doubt. But people that don't know what they're doing are getting their ass kicked, which is how the markets, generally work. And it's kind of a rotational ass kicking within a bull market. And the people that index have had a great run. So kudos
Yeah,
to them.
that great decade, basically. The past
This
10
has
years
been
have been,
great decade for sure, but it's been
yeah.
a great decade for everybody that's been in the market. You could be a stock picker, you could be short, everybody's made money. The last 3 or 4 years have been a hell of a run for indexers because the dips have been shallow and sharp, and the recoveries have been V's, and trading has been good, but like that's an indexable market right
Yeah,
there.
here's the past 10 years of the TQQ.
QQQ, man.
What is it, like basically
Hard to predict when
200
that'll end
times?
because you have crypto that'll slowly become part of the QQQ, and the internet, Google is the internet, right? These
Yeah,
companies that say they're decentralized are going to have to acquire users in the centralized world when they become big enough, because eventually you need customer growth. This whole bullshit about kumbaya and community is a joke because real businesses need customer growth. Everything else is socialism and communism. And so all this talk of like community and DAOs and everything else, and everybody being kumbaya managers by a million votes, good luck. I'm a little bit skeptical of all that, although it's cool. I don't want to be in business where it's 7,000 lunatics can vote. That's Reddit, and I know I voted already. I don't go there. God bless. Like I know a lot of people do, but good luck voting in a Reddit forum. So I'm a little bit skeptical of what everybody's excited about. And still that's why I think Apple and Google and Microsoft can continue to surprise, because the cloud and the internet is the big winner here. And that's probably why semiconductors, as we connect everything, semiconductors and compute. So the
yeah,
trend is your friend. I think my biggest mistake of 2020 was just my own philosophy of like, go with what's working. And whatever was working in 2020 stopped working in 2021 or got chopped suit.
yeah.
All right, have a great week. Have Happy New Year, and it was fun doing
Happy
it.
New Year.
I don't know, how many years have we been doing this? 10? 8?
I don't know. A long time.
All right, well,
A long time.
have a happy New Year, and I'll talk to you next week.
You too, Howard. Bye.